Welcome, everyone. We're excited you're here, and we are excited to be here. This is Inclusive Prosperity Capital's Solar for All Financing Products Introductory webinar. I'm Nate Hausman, Inclusive Prosperity Capital's Solar for All Program Director. And in just a moment, I'm going to turn it over to Carrie O'Neill, our CEO. But before I do, I want to cover a couple of things at the top. One is I want to let you know that this webinar is being recorded, and we will share a link to it in the next couple of days. You are welcome to relive it as many times as you want when we do, and to share the link to the recording when it's ready. We will also post it on our Solar for All financial assistance website when that goes live. I also want to let you know that you are in listen-only mode, but we encourage you to engage by typing questions into the Q&A box that's in the console at the bottom of your screen, and we encourage you to type those questions in as they arise. The earlier they come in, the more likely it is that we'll be able to get to them. So with that, I'm going to hand the floor over to Carrie O'Neill, IPC CEO, to share more. Carrie, take it away.
Thank you, Nate, and thanks everyone for being with us today. As Nate said, we're so thrilled for you all to be here. I did just at the top want to acknowledge that there's been a lot of news around the Greenhouse Gas Reduction Fund program and the Solar for All program right now, and of course, we're monitoring that. At the same time, we're committed to implementing our program and moving forward with our plans and our timeline. So to that end, today we're introducing our first financial products that we'll be offering. So if you go to the next slide, Nate, just to, Nate's doing the slides, right? So what we're going to cover today is we're going to just do a little bit of a refresher on our coalition and our program and where we're focused. Then we're going to start to get into the details of project eligibility. A lot of detail to cover here, so be prepared. And then we'll talk about our financing products, including the initial ones that we'll be launching. And then we'll do some Q&A. So let's get right into it, Nate. So disclaimer, you'll see these in the slides, in terms of where we are in our process, and this is for informational purposes and what have you. So I'm not going to read all the legalese. You'll see that when you get the slides. Next slide. So our Community Power Coalition, which IPC led, we were awarded a multi-state award for $249 million. And we're really focused on building up the capacity of developers all across the country who are able to implement some of the really impactful models around community solar and multifamily solar, which are over here in blue, including things like community ownership models that build wealth for local communities, affordable housing models where the benefits flow to the tenants who live there, really innovative models on things like manufactured home parks, which are owned by residents, having the opportunity to put community solar in those resident-owned parks and have the solar owned by the residents. Other things like models that are really focused on rural regions and wealth building for rural communities, including rural electric co-op ownership. And then models that incorporate storage and resiliency, a lot of work and a lot of hard thinking to do around that. And then last off are models that integrate really high quality jobs and workforce development into them. So while we are working across nearly the entire country, we'll touch on that in a moment, we're very focused on developers and replicating models across state boundaries and are very excited to work with state programs and share lessons learned around that. One of the ways in which we'll be doing that is trying to focus on states where the markets maybe are just beginning to develop by for some of these models, and really making sure that we're able to bring these new models into more and more regions. Next slide. So some of the objectives and goals of our programs is around the megawatts deployed across our 5-year program. We hope to deploy over 120 megawatts of solar, reach over 30,000 households. Here's a key one, just indicating how focused we are on developers. We hope to train over 500 developers that are able to build and scale these project models all across the country. And we've got about $187 million in financial assistance that we can deploy. So really focused on helping developers and communities overcome the obstacles and give them the resources they need to bring these project models into their communities. Next slide. So we have just an amazing collection of coalition partners that are on this journey with us and will be helping us to implement the program. We have, in addition to IPC, we have a number of other lender partners. Some will be focused on multifamily models like community housing capital, NeighborWorks Capital. Some will be focused on community ownership models like People Solar Energy Fund and Rock USA. Some will be focused on workforce benefit models like Grid Alternative. So lots of great opportunities on the lender front. And then we just have a really amazing collection of technical assistance partners that will be helping us with the capacity building, including BOSS, the Clean Energy Group, CCSA and IREC, University of New Hampshire, SURE, and some of our lender partners will be doing capacity building as well. The other thing I should mention is that we're very much looking to align all of these activities with DOE's National Community Solar Partnership. Actually, it's now called NCSP Plus because it's moved beyond community solar to incorporate multifamily models as well, and their Community Power Accelerator. So we're really hoping to expand and amplify the impact of that platform. Next slide. So in terms of, I just want to touch on the technical assistance. We're not really going to dive here, but I wanted folks to be aware of our technical assistance program, which will be launching later this year. And there's a note here for how to sign up for more information as we launch that with our implementation partners. But it includes things like training for developers, technical assistance, project level technical assistance, and then peer-to-peer community of practice models. Really, again, building up the capacity of developers to understand how to scale these various models. Helping developers plug into and coordinate with local workforce opportunities, what's already going on in their region. A lot of focus on community engagement and partnership development and how to reach the sort of communities we're trying to reach with these models. Interconnection best practices, lot of activity or challenges on interconnection around the country. So that will be another area of technical assistance. Energy storage technical assistance. Folks like Clean Energy Group will be providing project level technical assistance and case studies around that. And then also educating policymakers and stakeholders in states on the community solar front who maybe don't have the legislation and the enabling policies in place yet, or aren't as developed as they need to be. So that's another area that we're focused. So again, as I mentioned, we're not launching TA today. Those programs will be launching over the coming months. You can sign up to get more information about that. Next slide. So this is just a map of where we're operating. We're in all 10 EPA regions, 46 states plus the District of Columbia and Puerto Rico. The 4 states that we're not operating in are, I'm terrible at geography, Wyoming, Kentucky, Alabama, and Mississippi. Did I get that right, Nate? Hopefully I got that right. And so when we put in our application, we kind of, we were really looking at community solar policy and looking at states that we considered early action and then priority states and then long-term states. There's been a lot of movement already. Each year, there's policy developments that go on. So, take this tranching and this grouping with a grain of salt. We obviously want to be able to, bring along as many states and as many markets as possible, implementing community solar and multifamily models. We definitely get a lot of pushback from certain states. I want to be in the, in the early action, or, I don't want to be in the long term. So we get you, like, we're going to be with you to help, improve the solar deployment in your state. Next slide.
Carrie, just one quick clarification that
Yeah.
Arkansas, not Alabama,
Oh,
is
Arkansas, yeah. Okay, so I'm going to transition now into the project eligibility, which will then lead us into the financing products. So we're going to start to get a little wonkier. Apologies, but it's necessary. And much of this is driven by the Solar for All program guidelines from EPA, and then some of it is what we've layered on. So let's start out with the project eligibility criteria. So there are several criteria that have to be met. First of all, the nameplate capacity of projects can't exceed 5 megawatts AC. All projects have to provide a minimum of 20% household savings to residents. And then on the zero emissions technology front, these are, for our purposes, pretty easy. It's solar panels and storage and some enabling upgrades. Today, we're launching financing products for community solar. We're not yet launching the multifamily products. And so for community solar projects, there's some additional criteria that have to be met. So at least 50% of the electricity generated has to go to residential customers, and that has to be in the same utility territory. And then at least 50% of the benefits or the credits of the power generated from a community solar system has to go to low-income residential consumers, customers in the same territory. So there's all kinds of additional guidance that's going to be available that lays this out in gory detail, but these are at a high level the project criteria for eligible projects. Next slide. So I wanted to spend a moment. We're not going to go into gory detail here, but I did want to call out the definition of eligible customers. The qualified residential customers have to reside in. There's kind of 4 different ways in which we can identify these customers, and they would be eligible. So there are 2 tools that are available that we would use, or you would use, to make sure that the subscribers to these community solar projects are eligible and meet that test. So that's the CGS tool and the EJ Screen tool. And then there's another test around geographically dispersed low-income households. So this would be metropolitan areas that have incomes that are not more than 80% AMI, area median income, or 200% of the federal poverty level. And there's some alternative definitions around that. Or it could be folks who are living in affordable housing, and there are a couple of different definitions around affordable housing, whether it's publicly subsidized affordable housing or naturally occurring affordable housing. So there will be lots of additional detail on this if folks have questions on how to identify those residents that will help meet that 50% test on the previous slide that we talked about. Next slide. So many of you may have heard that this program does come with Davis-Bacon and Build America, Buy America requirements. Both of these requirements are in play when we look at our community solar projects. And so that is something that is definitely a consideration for these projects. We're probably going to be doing additional webinars to do deeper dives on these aspects. But just to be aware that the financing products for community solar will have Build America, Buy America, and Davis-Bacon requirements. And on Build America, Buy America, there was a waiver that was issued, was that in January, that goes through 2025, that does provide some additional relief on the Build America, Buy America requirements. And so that will be in our program guidelines as well. There are pathways to ask for project level waivers. And I will say, while we're open to pursuing those with folks, there is an open question as to how quickly those would be moved on and how they would be viewed by the current administration. So that can be the subject of follow-up discussion and webinars. Next slide. All right, so let's dive into the financing products, and I'm going to do some of this, and then I'm going to turn it over to John D'Agostino on our team, who's going to go into the some of the specifics. So, want to just paint a picture of programmatically across the Community Power Coalition, all the different products. And then we're going to focus a little more specifically today on what we're launching today. So our program, not just IPC, but IPC plus our other lenders, will focus on residential serving community solar and multifamily solar. And we have a variety of products available, from pre-development loans to interconnection bridge loans, construction, perm loans, ITC bridge loans. Some of us will be offering down the road PPAs and leases. And then we have an ITC recapture transfer guarantee product as well. So the things that the products that have the that are in blue and then have the little green box around them, that's what we're focused on today: interconnection bridge, construction to perm, and the ITC transfer guarantee. And then the others will be coming online, including with our lender partners in the coming months. One thing that we wanted to talk to folks about is that our overall screening and evaluation factors, because we're working on so many different models and working all across the country, there are a number of factors that will go into how we screen and how we evaluate projects. And we'll be working with our steering committee for this program to build this out more fully in the coming year. So what I'm sharing now is IPC's initial approach while we're working with our steering committee to build this out. So one of the factors that we're going to be looking at is geographic considerations. It's a big country, and we're covering most of the country. And so we will be looking at where the project is located. We're going to be looking especially favorably on projects that are in emerging solar markets. And when I say emerging solar markets, that could be emerging for a particular project model, not just solar writ large. Also a particular focus on rural communities. The extent to which there's deeper impact in reaching low-income residents, that's something that we're going to look at in our evaluation. We're going to look at the education and community engagement strategy. We're going to look at the approach to workforce development and the creation of high-quality jobs and small business enterprise support and creation. We're going to look at ownership models that really support community wealth building. We're going to look at community resilience benefits. And then we're also going to look at just overall cost effectiveness of the project and leveraging additional sources of funding. So I want to make clear, not every project is going to do all these things. Of course, we're not looking for that. But these are the sort of things that are going to be especially interesting to us, given where we're focusing our resources and the extent to which there are projects that are having deeper impact. We can be more flexible on our financing terms. That's something that we would look to do. All right. Next up, probably makes sense to just spend a moment on the 20% savings requirement and the 20% savings methodology. I have to say, I am not the expert on this, so there's going to be a lot of additional information in the program guidance, but at a very high level, the way in which we're looking at doing this for community solar, multifamily, different. So the projects have to provide at least a 20% net savings on household electricity costs over the period of performance. The monthly electricity costs So that would be the community solar bill plus the utility bill, or, depends on how that's handled, have to be at least 20% lower than the pre-subscription costs. And that's going to be averaged annually. It's not going to be measured monthly. In our underwriting, we'll review the assumptions that developers are using and the calculations and any agreements in place to verify the savings. And then if individual bills aren't available, and we do understand they're not always available, then we'd use publicly available state or utility level data in our own analysis, or you could use that and we would reconfirm on the annualized estimates. And so we provided the calculation methodology here. I'm not going to go through that, and you'll get the slides. And I would imagine there will be additional questions around this. And if we get a lot of questions, we may just do a webinar on how to calculate savings and how to think about this. All right. Next up, I'm going to turn it over to John D'Agostino, who's going to take us through our initial products that we're launching.
Thanks,
Take it away,
Carrie.
John, and introduce yourself.
Yeah, so I'm John D'Agostino, Managing Director of the Transactions team at IPC. And so I'm here today to talk about our 3 initial product offerings. And really, the spirit of these offerings is to try to provide financial assistance for different market segments, but also different periods in the development life cycle for those various projects. So first and foremost, the interconnection bridge loan. This could be a single project loan. This could be a facility supporting multiple projects. But this is to support utility interconnection deposits that are required as part of transmission upgrades for typically larger projects. As Carrie alluded to earlier, there's a 5 megawatt AC cap on any projects that the Solar for All program can support. In general, the expectation is this is going to be used to bridge that interconnection period for developers who cash flow, right, can be problematic in terms of highest and best use. And so the goal here is to catalyze those projects that would otherwise kind of be stalled out as folks look for either higher interest alternatives, right, from folks that are not specialized lenders in the space, or that don't necessarily have the capacity to do, larger loan sizes. So at a high level, and as Carrie also mentioned earlier, full term sheets and kind of program guidance will follow this webinar today. We're looking at minimum, maximum loan amounts of $1 million and $10 million respectively, up to a 100% advance rate against those projects, an interest rate of 5%, term available for up to 36 months, and then the borrowing period is so up to 9 months from closing. That will be, so the term is, on the actual borrowing length. So if some of these interconnection processes can take 12, 18, 24 months or longer. So this gives developers flexibility to have that loan outstanding as they work through that development, that utility interconnection process. So the availability period we're going out to market with is 9 months. And if for whatever reason, single project works through that development that interconnection life cycle, and the funds are repaid, the borrower will be able to re-borrow those funds. That the funds will still be available under the larger facility. So we can go to the next slide. Next in our offerings, IPC is going to look at a construction to perm or permanent debt offering. The goal here really is to fill market gaps for those high impact catalytic projects in traditionally underserved markets by offering concessionary terms that make projects with that 20% discount to existing electric rates pencil. So the support here is solar projects that have on-site storage as well. We're going to market with community solar, so I think storage is going to be less of a primary focus, but we're listing it here just for completeness purposes. And then this will also include an ITC or incentive or elective pay bridge feature for those that want to avail themselves of it if they're monetizing ITC via ITC transfer or elective pay. So the goal here is to really wrap the construction to perm and the bridge feature into one, so folks that are applying for this offering have flexibility in terms of what how their needs are being met. Scopes of work, the solar PV, we mentioned paired storage, less applicable for community solar projects. and as well as paired allowable transmission and distribution upgrades within the LIDAG geographic area. This is probably going to be the most flexible product in terms of market, what we expect from an inbound perspective. So we want to provide a very wide range in terms of available loan amounts. So as a minimum on the smaller end, $500,000. These are typically going to be smaller community solar projects. I know there are market jurisdictions in the country where you see, community solar, they're differentiated at a 200 kilowatt AC size, up to the larger end of $15 million, right? So this will be kind of approaching that 5 megawatt AC. This can be for single project. This can be a facility to support multiple projects across that size range. On the construction front, it'll be up to 100% of construction financing. And of course, there's typically a conversion from construction to permanent financing around mechanical completion, commercial operation. So that'll be at play here, which is why we're trying to offer that complete construction to perm financing. And then 70% post ITC monetization. Clearly, in addition to this, there'll be that minimum 30% kind of base ITC eligibility that would get you to 100% financing. But once the ITC is monetized, those funds will be repaid, getting you back to a maximum 70% baseline. Interest rate on construction and perm, 5%. And then the term here on a construction facility up to 24 months, ITC bridge, 24 months following commercial operation, and the perm can be up to 25 years. I know there are some markets that for various reasons, folks want shorter term debt. It makes sense given the market economics. So we didn't want to wed people to a specific term value. We really want to provide maximum availability to drive those cost savings into projects that are price sensitive or to preserve that 20% discount.
Hey, John, before you move on, there's a clarifying question on the interconnection bridge loan. What's the difference between the term and availability?
Yeah, so the availability is
Maybe
the period
go to that previous slide.
That the period is that the funds are available, and then once the funds are drawn, the term is when the loan is repaid. So it's typically repaid as a bullet repayment. So if you take the loan and let's say there's a facility that's $5 million, you have 9 months to draw that $5 million. It may be with interconnection, right? Not all of the projects are going through the interconnection process at the same time, but you want to get started. You want to get a facility in place. You might fund $2.5 million at the onset, $2.5 million in 6 months. The goal is to meet the market and try to give folks confidence, right, that the funds are going to be there so that they can invest in the project to get it to the point where they're going to put down those interconnection deposits. It's a great question. So we can skip ahead one more. And so the last product we're going to be talking about today is IPC's ITC transfer guarantee. So this is not a loan. This is a guarantee that it's an innovative product that IPC has identified, given asymmetries, if you will, in the ITC transfer market. Given the need many developers encounter when looking to sell an ITC or transfer an ITC to a buyer, buyers typically require either a guarantee, sponsor guarantee, or if that sponsor does not have sufficient or satisfactory financial strength, if you will, to support a guarantee, the ITC buyer will look for tax credit insurance to protect themselves against the risk of potential recapture down the road during the 6-year recapture period. So for smaller projects or younger developers who may not have a very strong balance sheet and can provide a guarantee for those projects, there's typically becomes stress on preserving that economic benefit to the end off-taker. So the purpose here is to try to fill that market gap where ITC transfer insurance is expensive for project developers that are really trying to drive benefits down to the end user. So we're coming to market here. The purpose is to provide a guarantee in place of that tax credit insurance. Expectation is that this will be for smaller projects, younger firms, right, that are trying to kind of approach and engage in this market. Minimums and maximums of the guarantee, $100,000 for the smaller end of the market, $2 million at the higher end. That's on a per project basis. And the coverage here, if you will, is 120% of the eligible ITC that's transferred per project. So you can see at the bottom here under the guarantee amount, so it's up to 100% of the excessive credit transfer liability, but this includes, there's a 20% penalty as part of that recapture. So that's informing the 120% of the eligible ITC that's transferred. So it's the maximum exposure, if you will, of the potential recapture liability. We're going to launch this program for an initial 2-year period, a little bit as a pilot, and see what uptake looks like. If we're able to kind of receive commitments, the guarantee will be fully subscribed, if you will. And if we find that at the end of 2 years we still have funds availability of that kind of portion that we've earmarked, the expectation is that we would recycle it into other financing products, right, that we have traction that are a little bit more traditional. So we're excited about this product. We're excited to, especially with the rise and the expansion of the ITC transfer market, it's kind of there's a lot of opportunity for market cultivation and development. We think this will be a hit with a number of projects.
And John, I just want to give a shout out to People's Solar Energy Fund and some of the developers in their network who really kind of came to us and said, there's a really great opportunity and need here for this. But as John said, we're really excited to work with the market on this and see where it goes. Back to you.
Yep. And so at a high level, we want to make sure that we are touching on long-term asset management, operations, and maintenance. One of the opportunities, I think, of IPC coming to the table as a financier, kind of with a track record in the green bank world, is there's an emphasis on understanding what it means to own assets, that there are ongoing obligations, making sure that once projects are constructed, they are operated in a workmanlike and a professional manner. That includes, who is answering the phones when there's a problem, who's coordinating preventive maintenance visits or responsive maintenance visits, making sure there's sufficient reserves for inverter replacement down the road, right? Or make sure from a borrowing basis, debt service coverage. And then again, at the end of these systems, making sure there's a plan or an allocation for deconstructing the system at the end of a site lease period or a power purchase agreement or what have you. So this is an emphasis. This will be something that IPC staff dives into as part of diligence and underwriting, understanding, have folks own solar assets before, right? If you're doing a construction to permanent financing, have they been through an interconnection process before if you're doing an interconnection bridge loan? So this will be a focus during diligence. It'll also be memorialized in any sort of financing documentation as an ongoing obligation. And it's always helpful for folks to understand those obligations, right? So you're backtracking, staffing, and just time value of money for supporting these projects into your pro formas. You had one more?
I think it's over to me, but I wanted to check with Nate. Are there any questions you want us to answer on financial products now, or should we wait till the end? And I can't remember how we have a few more slides to go.
Yeah, there are several questions that have to do with specific terms related to fees for developer for ITC transfer guarantees. How will the ITC transfer guarantee be priced? Cost structure for the ITC guarantee.
Yeah, so John, I'm happy to take it at a high level. So we'll have detailed term sheets coming out and getting posted, and it'll be part of the follow-up emails that go out. We do expect there to be some fee for the availability of the guarantee, and then a fee that reduces based on what's outstanding. Am I saying that right?
An ongoing participation.
An ongoing participation fee. And we worked closely with People's Solar Energy Fund and other, developers really to hone in on the economics and looking at, like, we know how expensive insurance is, and that's like not working. And so we've tried to really structure this in a way that does have some fee, because this is important from an EPA perspective and a market transformation perspective, that the pilot is to prove out in some ways the data on, like, these are great credits, right? Like the risk is being mispriced here. the cost of insurance is being mispriced. So more to come. Stay tuned on that. We don't have I don't have it right at our hands. Other questions on that we should answer right now, or keep going?
I think we should keep charging.
Okay, we'll keep charging. Great. So in terms of, this is federal money. So I just want to put out there, with federal money does come some additional requirements. So some of the additional obligations that come with these financing products and programs is there will be some financial reporting that's required. Well, that's typical of any lender, so that's not unusual. And this is a practice that IPC has had, but certainly in this program as well, project performance, kind of the actual solar production versus expected, and OpEx and reserve accounting. Obviously, for community solar projects, there's going to be subscription management. And then we've touched on Davis-Bacon, Build America, Buy America, more details to come on that front. And then we have to report to EPA, so we'll be asking for some additional reporting at the transaction level. There are some additional requirements that will be included, and one of the follow-up items that we'll be getting out to folks are, the diligence checklist itself, and some of those items may have ongoing reporting requirements. There are additional federal and state regulations that come into play that will potentially touch this financing, depending on whether it's community solar or multifamily. And then there are definitely consumer protection requirements around subscriber management. We may actually be touching on that in a moment. And as John said, the long-term asset management piece that we'll be looking for as part of diligence. Here we are, consumer protection. Yeah. There was a very heavy focus in the EPA program guidelines for Solar for All around consumer protection and consumer finance laws. These are all things, these are things that make a lot of sense. So it's things like clear, fair, plain English terms in the subscriber agreement, and truthful and transparent marketing and communications for, you as a developer who maybe you yourself or you're hiring a subscriber manager. What are the practices that they are using to get, residential subscribers into the program? And then, really, strict compliance and enforcement around that. So we'll be doing training around this, and in a part of our technical assistance and capacity building, we'll touch on this. And it'll definitely be part of our program guidelines and on our underwriting process. Next up. All right, so at a high level, just wanted to describe our intake and application process. And we'll be launching our intake portal in the next couple of weeks. But we wanted to get out in front of folks today and just, give folks an opportunity to kind of, get oriented around how we'll be doing this. So our process starts with an intake form where the developer submits some preliminary information, and we screen for eligibility, and then we let you know if you're eligible and invite you to apply. So the point of step one is there are a lot of requirements for this program, and we don't want to waste folks' time with a full-on application. So in this step, we're really trying to, make sure you're in the box and, you can proceed with an application. So in the application stage, this is where you would submit, the typical sort of materials you would submit for, any sort of financial product lending. And then we would do diligence and underwriting based on our published guidelines. And then we'd make a decision and communicate that to applicants. So if it's a yes and we're moving forward to the next stage, then we would negotiate and execute a binding term sheet, and then we'd move from there into closing and financial document execution. Let's go to the next page. So I realize that on this webinar, we probably have lots of different stakeholders and lots of different types of developers. And for some developers may be ready to go, like they're ready, they've been waiting for this, and getting ready to, have that intake portal be open. There may be folks on the line who are new to this or looking to, maybe they're doing solar development, but want to get into these innovative models and really, are looking for that technical assistance. So for those of you that are ready, as we're putting out our program guidance, there's some additional resources in this presentation when we send it out, links around BABA and Davis-Bacon and project eligibility. Getting familiar with those things makes a lot of good sense. For those of you that are a little bit earlier or looking for the TA, definitely sign up for our mailing list, and we will have a whole suite of training and capacity building and peer-to-peer learning and project level assistance that is going to get you ready to put together and put in a financing application, and not just for us, again, across all our lender partners. So kind of think of that as two tracks. Those may be ready to go, and those that are going to need some additional TA to get ready to engage with us or with other lenders. And I should mention, we do expect to have kind of ongoing webinars and engagement in addition to the TA and the capacity building that's coming later, so that we can get into more details around some of these financing products. One of the things that we're considering is, maybe an open office hours sort of approach where folks can ask questions before they're ready to come into the intake form. So we'll have a number of resources available to folks. Everything that's in blue on this page, is something that you can click on and link to and review. And then we have a number of resources for our financing products around program guidance and term sheets and diligence checklists that will be getting posted in the next week or two or three. As we get ready to launch the intake portal. And I think with that, off to Q&A.
Yeah, thanks so much, Carrie, John.
That was a lot of information.
Indeed, and we've got a lot of great questions too. So I'm just going to start at the top here. One question was that we mentioned that we had 187 million available to be deployed versus the 249.3 million. Can you speak to that?
So, right, great question. The Solar for All program requires that 75% of the award is used for financial assistance, and then 25% of the award can be used for technical assistance, workforce development, community engagement, outreach, program administration, and compliance and reporting. So the 187 million is that 75% of the award that will go to financial assistance. And that's across all of our lender partners. That's not just IPC, that includes our other lender partners that will be doing lending as well.
Great. Another question about how green banks, we've got green banks on the line, how green banks, and we'll extend it to states too, can engage in this program. How can they get the word out?
Yeah, that's a great question. So we are developer focused. So to the extent that you have developers in your network that you think could take advantage of this, either what IPC is launching or what's coming on TA or what some of the other lender partners will be launching down the road, please get in touch with us or direct folks to our mailing list to get signed up. We're happy to also meet with you to talk about how to get the word out. There are some folks that we've been doing meetings with just to make sure that their staff is really up to speed on our programs. We're happy to do that. One other thing I should mention that we didn't touch on is we want to be able to bring these project opportunities to other lenders all across the country, whether they're green banks or CDFIs or community banks or what have you. So that's another way to think about engaging, the opportunity to co-invest on some of these projects, certainly bigger projects. So those would be a couple of different ways to engage. We love partnering with folks, and we absolutely want to continue to do that with this program.
Great, thanks. Couple questions. Well, one about challenges specifically meeting BABA requirements for solar panels. Wondered if you'd address that.
Yeah, we're all going to have to work on that together and share where materials are available and where they're not. You know, this is something that we know the Solar Energy Industry Association is very focused on. You know, what we hear at the highest levels is capacity is growing, capacity is available, you can get American-made materials. I think that may be true. I think it can be hard for smaller projects and developers to secure those materials. So I think we all, again, have to work together, stay in close communication, understand where materials are available, where they're not available. We're worried about batteries, right? I mean, I think that's something that the industry is generally worried about. Can we find the components? That it's definitely something that we don't have all the answers on, and would love to partner with folks on how we do get access to compliant materials.
Great, thanks.
We're not focused on the PPA product at this moment.
At
Later
this
on
moment,
down the
yeah.
road, we're planning a PPA related product.
Yeah, well, if that was the question, we will offer a power purchase agreement or lease option, but there are constraints in how we do that and when we engage with the project because of the EPA regulations around this. So we would have to essentially develop the project. We couldn't acquire the project. So we'd have to be involved earlier. And this would be true for some of our other lender partners who offer a third-party ownership platform or model. So there's work collectively we all have to do to figure that out and how to use the Solar for All dollars in that model. If that wasn't the question, put your question in again. If we answered the wrong question, let us know.
Great. There's a question about whether there will be closing fees or annual servicing fees for both the interconnection and construction to perm financing. John, did you want to take that?
Yeah, I mean, we mentioned earlier, what we presented here is a high level overview of the products, and the full term sheets are still being finalized. And so those are all going to be available subject to, you know, an initial intake. And at a high level, right, like traditional financing, there are closing fees, and the goal here is not to kind of reinforce traditional closing fees, but to have them so that folks, when they are applying, understand that there's a cost to engagement to like entering into these agreements, right? The challenge we're going to have as IPC is when we open the application window, the expectation is we are going to receive a lot of inbound inquiries of folks saying, what about this project? What about this opportunity, right? And we're going to have to filter through. So the goal is to have all that stuff locked up along with the interest rate term and kind of all the DSCR and kind of all those sorts of security collateral considerations, so that when folks read the term sheets, they'll be able to say, yes, this is a process that I can engage in because this is helpful for my project in ways that traditional financing is not.
And just to reinforce the point that I was making on, you know, how we screen and evaluate projects, the general thinking is the deeper the impact and the more innovative the project, the more we can try to be flexible.
Great. Another question about 20% savings requirement. Is this comparable to typical community solar where households are limited to 5 to 10% savings? Would Solar for All funded projects require solar projects to increase the provided savings?
20% minimum savings. That is the threshold. Has to be per the calculations, you know, 20% minimum savings delivered. And so, you know, one way that we'll look at this is if there are markets where it's more difficult to achieve those savings based on low electric costs, no other subsidy available, what have you, that's a consideration that we would take into account in thinking about the pricing on the financing. We understand it's, you know, wildly divergent economics across the country. And we really, really want to be able to serve markets that haven't yet had a lot of activity. So that is absolutely something that we'll be looking at.
Great. And here's a question about roof replacement, which might be a good opportunity to clarify our markets and also what kind of enabling upgrades are eligible. So
Yeah.
the question is roof replacement a barrier to installing and could roof replacement be financed with solar installation? Yeah.
Yeah, well, certainly on multifamily, which we're not yet launching, we're focused on community solar first. If you're doing or proposing a community solar project that would be sited on roofs that need some replacement, yes, that would be eligible to be financed. The other enabling upgrade that John touched on, which we believe is more likely to be for community solar, less likely for multifamily solar, is we do know in some parts of the country, there's, a huge backlog of transmission and distribution upgrades, and that's a barrier to getting the community solar project, on the grid. And so to the extent that, kind of all other avenues have been explored and there's, no other options for funding that, that's something that we could fund, but the T&D upgrade has to be sited in a low income census tract. Another shout out, this idea came from our friends in Virginia as they were thinking about their program and we're thinking about how that can really help particularly rural communities stabilize their grid resources and provide additional economic development. And we thought that was a fantastic idea, so we included that.
Great. A question here, would IPC be open to participating with others like private lenders or even other GGRF awardees to finance a product?
Yeah, absolutely. On the private lender side, 100%. Yes, we would love to be able to, we would love to be able to work with other lenders to teach them about how to underwrite these deals so that, when the Solar for All program and its money is gone, we've got lenders all across the country who are comfortable underwriting these deals. So absolutely on that. On the GGRF front, it's a little bit of a mixed story. So we all in the Solar for All program have committed to EPA that we wouldn't have multiple Solar for All programs in the same deal, or if we did, only one program gets to take credit for it. And I think collectively we've realized it's probably easiest just not to mix and match. There is a lot of openness to pairing Solar for All dollars with CCIA and NCIF dollars. And so I think the question that needs to be worked out there, and it's really a question for all of us on the program side, is how we would do the reporting and attribution to EPA. I know people haven't really focused on that yet, but conceptually, yeah, we're open to that. And that's a big piece too as we think about partnering with community lenders who are maybe getting a CCIA award. The CCIA award and eligibility use of funds overlaps 100% with the Solar for All use of funds. So there's a nice opportunity there.
Excellent. We're getting close to the top of the hour here, so maybe we'll just do one or two more questions before wrapping up. I do want to emphasize that we will make a recording of this available both on our website, and we will send out a link to the recording to attendees. But before we get into the wrap, there's a question about whether or not this program will be available for solar projects on tribal land. Carrie?
Yeah, it's a great question. We in our work plan, we do not specifically speak to tribal one way or the other. We speak to more state jurisdictions. And so I don't know, and I don't know, Michelle, whether you have a point of view on this. We certainly would feel comfortable doing technical assistance. I don't know if we would be able to do financing. On the other hand, we're working very closely with other states and other tribal awardees where, if you came to us and we couldn't serve you, we could certainly put you in touch with others who should be able to serve you.
Great. Just looking through the questions here, there's a question about solar and storage installers providing O&M and software management contracts.
Yeah.
Yeah.
Yeah, so we do understand that solar and storage installers do provide O&M and software management contracts that that's typical. And so and that's long-term asset management, as John said, is critical to be covered. Those are eligible uses for the financing. You can finance those activities with the loan proceeds. And that's something that we would be. Oh, wait, yeah.
It's also worth clarifying, right? Like there's different types of ongoing asset management obligations. So you have workmanship, there are original equipment manufacturer warranties, and these are all things that we're going to look at. However, we also want to make sure that things happen, projects break, pieces break, components break, and so we want to make sure that there's somebody who is coordinating, quarterbacking, annual preventive maintenance inspections, unscheduled maintenance if something happens and a system goes offline, who's picking up the phone to make sure that system is getting rebooted, right? So these are all larger asset management questions. Reporting, who's doing the reporting, that's a sort of thing.
So we'll look for that and confirm that it's there in underwriting, and to the extent it needs to be covered as loan proceeds, it could be.
Yeah.
But it isn't required to be.
Thanks for that. And we are closing in on time here. So I do want to, Carrie and John, I want to first thank you for that. There's a lot of information provided. I want to thank the whole team at IPC as well.
And I want to effort. Yes, there are many folks standing behind the three of us who are talking today. Thank you all.
Indeed. And I also want to acknowledge that we have not gotten to all the questions. There's a lot of great questions. Thank you for your engagement. Thank you for your attendance, and appreciate you engaging with us on this. We will be providing additional information about when our intake process goes live and follow additional program guidance. So we will follow up with that. As I said before, we will also follow up with a link to the webinar recording, and want to thank you all again, and wish you a great rest of the day.
Thank you, everybody.
Take care.